Hey guys, welcome back to the channel. My name is Brad. This is a Firefighter's Financial Toolbox. One of the cool things about the internet is the availability of tools to help you in your investing journey. And one of my favorite things to kind of check back and look at things is Portfolio Visualizer. Now this is a free website. You do have to put your email in and log in. But one of the cool things you can do is you can backtest portfolios. So I decided it would be neat to see if we back tested, because I know a lot of people out there are dividend investors, and dividend ETFs are certainly an easy way to get dividends and not have to worry about picking individual stocks. So I decided it'd be neat to see if we look back for, say, 10 years to see how some of our dividend ETFs did against a simple S&P 500 fund. So what we're going to do is we're going to go ahead and start us up here. Now this is a year to year, so we'll start with, let's say we're starting in 2010. Okay, our end year is 2020, because we just finished up that year. Let's say we have, let's leave it at 10,000. So we're starting with $10,000. We're not adding anything, we're just going to see how it goes. So of course, let's start with VOO, the Vanguard S&P 500 ETF. That's going to be 100% of our first portfolio. Now, I know one of my favorite dividend ETFs is a Vanguard High Dividend Yield ETF, and that's ticker symbol VYM. So I'm going to go ahead and make our second portfolio 100% VYM. And I just want to take a look and see how they compared over the last 10 years. So we'll analyze portfolio, and we see we have 100%. VOO is portfolio 1 and VYM is portfolio 2. So we scroll down here and we can see that portfolio 1, which is in blue, the S&P 500, did beat it substantially. Your $10,000 would have grown to about $36,488, and with VYM it would have grown to about $29,677. Now let's take a look at the year-to-year returns, you guys. This is where it gets interesting. You see, 2011, VYM killed it. 2012, it was pretty close. 2013, again, pretty close. 2014, almost identical. 2015, underperformed, but they both did. 2016, it actually beat the S&P. 2017, trailed a little bit. 18, they both lost, but it did lose more. 2019, it trailed pretty good by about 7%. And this year, 2020, well, we all know that the S&P 500 has been led by mostly technology stocks during the pandemic this year. So obviously, it underperformed big time. But it shows you that over that time frame, you ended up about $6,500 difference. So not a huge amount. Although remember, that is starting from 10,000. So the best year the S&P had 32.39, and the best year for VYM was about just a little over 30%. The worst years were negative 4.5% for VOO, or the S&P 500, and almost 6% for the worst year there in VYM. So let's come back up and let's take a look. Let's change the second one here to another one. Let's say a lot of people like SPHD. And SPHD is the Invesco S&P 500 High Dividend Low Volatility ETF. So let's make that our new monarch, because ideally that would be less volatility. Again, now this only goes back to 2013, so that makes me think that that was the first year maybe that they had that fund. But starting from 2013, or actually the end of 2012, so that must be, the S&P 500 grew to about 30,871, and SPHD only doubled up to about 2151. So if we look at the year to year, it did beat it in 2014. It beat it in 2015. It beat it again in 2016. And then it's trailed since then. And we can see this year was an awful year. 2020 was an awful year for SPHD. It really took a hit. It ended up negative 10.35, where the S&P grew 18.29. All right, what about another famous one? We talk about NOBL. That's the ProShares Dividend Aristocrat ETF, another favorite of dividend investors. Let's take a look at how this performs. Again, 100% in each stock. Now this one's going back to the beginning of 2014, so imagine that must have been when that ETF came out. So we can only go back as far as the ETF existed. But from the end of 13, or the very first day of 2014, our $10,000 in the S&P 500 would have grown to $23,318. Now in the ProShares Dividend Aristocrats, the NOBL, that would have grown to $20,861. So it's trailing by about 2,500. Not too significantly different. If we look at 2014, again, we beat the S&P 500. 2015, which wasn't a good year for either, right? Trailed it by a little, about almost 1%. But again, the S&P was only 1.3, so not a good year for either. Looking at 2016, they were pretty equal. Again, in 2017, they were pretty equal, right at 21-ish percent. 2018, it actually did better. Even though they both trailed, we can see that the S&P was down 4.5%, but NOBL only down 3.28%. 2019, when we had that great year, it trailed it by about 6%. It's hard to say that was a bad year when they got 26.94%. But again, here we are in 2020. 2020, again, because of the pandemic, a lot of difference. The S&P 500 had all those information technology stocks leading the way. So it trailed by almost 10%, you guys. So what does that tell us? Well, for one thing, it doesn't tell us a lot, because looking back never tells us what's going to happen in the future, right? It just shows us what we already know. I believe, for simplicity, the easiest way for most people to get good coverage is to either buy an S&P 500 index or a total stock market index. But I like dividends, and I too have become a partial dividend investor. Now, the dividends that I work with make up a small portion of my portfolio, but I do hold VYM. I also hold VIG. So let's try one more here. Let's try VIG. That's the Vanguard Dividend Appreciation ETF. Let's see how that did. Again, this goes back to 2011, so it must have been when that started. So if we started here, we can see it trailed a little bit, and now would have been 36,488 for the S&P 500 and only 33,000 for VIG. So not a huge difference, about $3,000 over that 9 to 10 year period. But we can see that in every year it actually trailed. The only year it did better than the S&P was when they were both down in 2018. It only lost 2%, where the S&P lost 4.5%. So let me do one more comparison. I want to compare two that I own. I want to compare VIG to VYM. Now, again, this is a little different comparison because these are both dividend paying ETFs, right? So we start, this goes back to 2010, and it looks as though portfolio 2, which is the Vanguard Dividend Appreciation ETF, beat out VYM, which is the high dividend yield, by about $4,000, you guys. Again, that shows you, even though it has a smaller dividend yield, the appreciation in the stock actually made it a little bit better. Okay, so as I said, this doesn't tell us a whole lot about what because it's looking back. We can't really use looking back as an idea for moving forward. Do I like having dividends every month or every quarter? Yes, of course. But even an S&P 500 ETF is going to pay you some dividends. So when we think about that, think about simplicity. I think if you want to add dividends to your portfolio, it's certainly not a bad idea. I probably wouldn't go all in and not have some sort of basic index fund, either total stock market or S&P 500. But everybody has their own idea of what is right for them. All right, you guys, I hope you got something out of this. For me, it was kind of neat just to have a look back to see what happens. If you got something out of this, do me a favor. Drop me that like. It really, really helps the algorithm, gets my videos out to more people. If you want to help me out even bigger, hit that subscribe button, ring the bell. You get notified every time I make a video. Try to make at least 1 or 2 a week. All right, we'll see you. Thanks.